Welcome to another episode of COVIDCast. I am your host, Justine Isaacs. I'm so happy to be here. Tonight is the 74th episode of COVIDCast, and we have an amazing show for you tonight. It's going to be the conference recap of the Building Wealth conference that just happened last week. So if you missed the conference, or if you did come to the conference, don't worry because we have an amazing show that we're going to highlight the top segments from the conference from the Friday, Building Business Wealth, and from the Sunday, Building Generational Wealth. Don't forget that the memo is live. Go to smallbusinessportal.com to get the memo. It's a conference booklet with all the tips and all the points that you want to hear and that you want to read. So tonight, the top segments that we are going to have are demystifying the numbers, accessing a loan, teaching kids about money, and we have a very, very special ending. If you are a member of the PSOJ, we just want to thank you. I want to thank all of our sponsors. We want to thank all of our speakers that came out. We want to invite you, if you have a vision that you see the private sector growing and developing, and you wish to help to contribute towards it, you can join the PSOJ and become a member. So without further ado, let's jump in to the conference recap.
The PSOJ seeks to empower and to create, and build. That's what we're about. For too long, Jamaica has been struggling along with anemic growth, less than 1% growth average over the last 2, 3, 4 decades. And, this is very disheartening because with Jamaica as a country, we have so much potential. When I travel the rest of the region and other countries and I see what is possible for Jamaica, the beautifulness of Jamaica itself, the entrepreneurial and the spirit of the Jamaican people, we have so much potential that we have not been able to utilize and maximize. And this is what the PSOJ is about. The PSOJ is about trying to really unearth that potential that we have. You know what I mean? As a people, and the PSOJ Access to Finance Facilitation Panel has been focused around micro, small, and medium enterprises, right? Because this is where a lot of the value is. Any big firm that you see, any large firm that you see was once a small firm. You know what I mean? And therefore, this is where the innovation and growth must come from our micro, small, and medium enterprises as they progress from micro to small to medium to large. That's what we want to see. And this is where the innovation normally comes from. This is where the new ideas come from. This is where value creation comes from. It normally comes from this segment. And this is where it has been a structural deficit for Jamaica that we have not been able to finance to define the solutions, the ecosystem, the various financial solutions to drive and propel this segment. It's just in the recent maybe couple of years that we with the Access to Finance Facilitation Panel and the PSOJ focusing on this area that we have been able to really put some attention. There was some focus before, but we have increased that focus and we're starting to see results. It's not an easy road because behaviors are not easy to change. An example of that is forms. How much people have to go to a bank and hold up a long form you have to fill out. When you go to a development bank or institution, how tedious is that process? That's one of the areas that we have looked to support and to really disseminate. How do you move from an informal to a formal? How do you get into the formal and be able to access the benefits of the entire ecosystem? What does a small and medium enterprise ecosystem have to offer small businesses, micro businesses? And this is where we have been working very hard. And we know that this is where the growth potential for Jamaica is, because we know SMEs impact GDP by about 50 to 60% of GDP is driven by micro, small, and medium enterprises, right? And we know that MSMEs create about 60 to 70 to almost 80% of employment in Jamaica. And we know that the percentage of financing from our deposit-taking institution or banks and other DTIs is somewhere maybe around 11, 12%, somewhere 10 to 12% in that range. So if the micro, small, and medium enterprises are powering 50 to 60% of our economy, then we know, and they're only getting 10 to 12% of financing from deposit-taking institutions, that does not add up. And that is one of the reasons, and this is a structural deficit, and it's one of the reasons the PSOJ Access to Finance Facilitation panel was born. You know, how do you build and sustain a profitable business? And how do we equip the next generation to understand and to keep and to make money? And we talk about that one a little bit. But we know the conversation on money has been one that is like almost a negative conversation to have. If you say you want to earn and create value to make money, you know, it's like, you know, why are you so, you know, why are you so driven by money? You know what I mean? And, you know, our relationship with money and our attitude to money, you know, it varies from those who are obsessed, from those who think it's a bad thing, you know. So what is that relationship with money? And I think on Sunday, Nevada is going to get into that somewhat with the spiritual laws of money. And by the way, on Sunday, which is when we focus on families and intergenerational and teaching our children, this idea was born out of Nevada, because Nevada Powell, our chief architect, continues to teach children at Campion. And he discovered that the children are not being trained in just financial literacy. So if you don't train their minds, if you don't expose them to to money, to investments, you know, and what are we training our children for, you know? And out of that, we decided that we would do a Sunday family day where we'd have the children. And I think you must make sure when you come back on Sunday, bring your children so that we can break it down, simplify it for them, that we can understand how we can relate to money in a spiritual way, because it don't have to be a bad thing, it don't have to be taboo, you know? So Sunday, let's make sure that we're there with our families. You know, I'm excited, I'm very excited about our Sunday day. I'm excited about today too, looking on all our speakers, the topics that we will cover, and really looking to empower the minds of our small and medium enterprises.
Demystifying the numbers, and that is exactly what we're going to do today. Okay, so let's look at the first statement, which is a profit and loss statement. Guys, when you hear P&L or income statement, your eyes may glaze over, but all it is three main things. Revenues, where is the money coming from in the business? How much income are you earning? And then expenses, and there are three types of expenses that we're going to talk about. And profit, are you actually making any income, any net profit in your business after revenues and expenses? And the three expenses that you will see on a P&L statement are variable expenses. So those are expenses that change one-to-one with the revenue. So once your revenue goes up, those expenses go up. For example, we have commissions, right? So you have, every time you earn $1, you have to pay your salespeople commissions, for example. Then we have semi-variable expenses. These are expenses that are fixed in the short term, but they vary in the long term with revenues. So this, for example, maybe your marketing expenses, ads expenses. And then finally, we have fixed expenses, those that don't change month to month, maybe over a year change. So that's like your rent, for example, is a fixed expense. And then we have some profit on the P&L statement, which is revenues minus expenses is profit, right? So the first type of profit on the P&L is gross profit. That's revenue minus. Second is operating profit, and then you'll also see net profit. All right, so second, we have the balance sheet, assets, liabilities, and shareholders' equity. That's all you're going to see on the balance sheet. Assets are the things you own that will help you to generate revenue in your business. Liabilities are the things you owe to other people, like your suppliers or your bankers. And shareholders' equity is the amount of money that's put into the business, its owners, plus retained earnings, which is your net profit accumulated year over year. And the balance sheet is called that because the balance sheet must always balance. Assets must equal liabilities plus shareholders' equity at all times. So this is a quick overview of the three statements. I'm going to continue with the third statement, the cash flow statement. So let's put the cash flow statement on the screen. The easiest way to understand the cash flow statement is it consists of three main parts. Cash from operating activities, right? So this is cash from selling goods in the business. Then you have cash from investing activities. This is cash that you generate from the assets part of the balance sheet. So purchasing assets and selling assets. And then finally, you have cash from financing activities. That is cash that is generated or used from the shareholders' equity and the liabilities part of the balance sheet. So cash from the bank, cash from the investors, that all goes into cash from financing activities. And then the last thing you'll see on the cash flow statement is how much cash you have on hand at the end of the period that you're looking for. All right, quick and dirty. So we're going to dive into this in more detail. But now let me introduce my panelists to the stage. First up, we have Mark Gale, who is the CEO of TCP Things, as well as an amazing financial analyst. If you are on Twitter, you see Mark all the time on Twitter, right? And then we have Julian Morrison as well, who is a manager for private at Proven, and he's also an amazing financial analyst. Hi, Mark. Hi, Julian.
Hi, Lysandra. Welcome, Julian. Thank you for having me.
Yeah, man. Greetings.
Hi. How did you guys think about that quick intro to the three statements? Do you guys have anything you want to add to my intro?
No, I think personally, I think you nailed it, Lysandra. I think you did a great job. You captured, all of the kind of like big picture items. I personally, I've never really considered the semi-variable expense. So when I was reading it, I was like, interesting. It's an interesting categorization. But yeah, you're absolutely right. Nailed it.
Awesome. Anything to add?
Well, I think it was a good summary. It's good to also understand that it can be seen as a funnel. So you start from the big number, which is revenue, and you work all the way down to what is called the bottom line. So it's a funnel. So that's another way of interpreting it.
Yes, thank you for adding that. All right, so now I want to hear stories because Mark, you own a business just like I do. And I want to go through each of the statements and I want you to tell me a story about how you use that statement to make decisions in your business, because we want to inspire our business owners here because the numbers, when our eyes glaze over, we need some inspiration to really look at the numbers. So let's start with the P&L, Mark. How do you use the P&L to make decisions in your business?
Okay, so yeah, I love the way you set that up, Lysandra, because the truth is that, I love reading financial statements because they do tell a story, right? They tell you the type of business that it is, and it also tells you how you are going to, how you can expect the business to be run. So for example, when you look at a profit and loss statement, if you see very, very low gross profit numbers, meaning the difference between revenue and cost of goods sold is low, so your gross profit is very, very high. So if you have high gross profit numbers, then the business has a different characteristic than if it has low gross profit numbers. So as a business, right?
Okay, so gross profit, guys, is revenues minus direct variable expenses, so cost of sales. So
Right.
in order to generate that dollar of income, you have to have that expense associated. So that revenue minus that direct expense is called gross profit. And what Mark is saying is that high gross profit means that your company is viable. All right, continue, Mark.
Right. So what I was getting at is that different businesses have different structures or financial characteristics, right? So, for example, a software company may sell software for $100, so the revenue is $100, but the cost of goods sold may be $1 or $5, so their gross profit is 95, right? So that's a common characteristic of software companies. Gross profits tend to be high relative to revenue. Whereas if you go to something that is, much more commoditized, so let's say like salt, for example, like if you're in the salt business or sand business or something else, something that, everybody can, is a high volume product, though you may earn $100 of revenue, but the cost per $100 of revenue that you earn may be, say, $90. So your gross profit may only be $10. Right. So for me, whenever I'm looking at the financial statements of a company or even my company, even like all of my products, what I think about is what does the gross profit structure and the net profit, what does the gross profit structure of the product or of the company tell me about the opportunity, right? Tell me about the product, tell me about the company. So for example, right. I run a greeting card business. And we make greeting cards, I will make tote bags for women. And, greeting cards, because they're based on paper, they're made in paper, the gross profit margin tends to be higher. So what I know from that is that, okay, because the gross profit margin is higher, a lot of things are different. So, I make different decisions, right? So I know that from every single sale that I generate, I'll have a little bit more extra cash so that I can invest it in marketing and so on. As opposed to, I know that with my greeting card, I can sell it in a retailer or I can sell it in, in a bunch of retailers. And then when I sell it in a retailer, I know the type of markup that I can give them. So when you sell via wholesale to a retailer, they, if you sell it to them for $100, they're going to want to put their own markup on it, right? So,
all right.
Yeah.
Okay, all right. So you said a lot of things that we're going to have to really parse down here. But before I try to parse it down, we have two questions. And Julian, I want you to help us answer these two questions. One is, what percentage difference would you consider low? So if your gross profit is 50%, is that low or is that high? Because Julian, you actually look at these profit and loss statements to decide which companies to invest in. So what's considered low versus what's considered high?
Okay, so it really, as Mike mentioned, it really depends on the industry and the product category. Because for instance, if you are selling cement and you're getting a particular percentage spread on selling that cement from a gross profit standpoint, it might be different than software. But let's look at what cost of goods sold is specifically. So let's say, for instance, you're a manufacturer and you make products. So COGS, or cost of goods sold, is really looking at your inputs. So what are the materials, what are the raw materials or inputs that you have to purchase to actually make it so that you can sell it? On the flip side, if you're a distributor, let's say, for example, you're a student and you want to sell pencils to your classmates, you'll have to buy those pencils at $10 each, for example. That would be your cost of goods sold because you bought those inputs. You're not a manufacturer now, you're just a retailer, you're buying to resell. You're buying the pencils that are already made for $10 and you want to sell them for $15. So the $15 multiplied by the volume would be your revenue. So it's going to be the difference between them. So the $15 that you sold the pencils for and the $10 that you bought them for, that would have a $5 difference. That would be your gross profit in that instance. So that's a simple way of looking at gross profit. Just what you paid for that material and what you sold that material for as an end product. That is your gross profit. Then after that, we move on from there.
How do you know if it's high or low? That was the question. So is 50% good or is it bad? Is 20% gross profit good, or is it bad?
It has to be contextualized by peers because it depends on the industry and the animal that you're dealing with. So 50% is, in just for numbers sake, that's relatively high compared to many businesses.
Yeah.
That's really high. 30%.
Unless you're a software business, 50% is low in a software business.
Yeah, but a lot of things kind of weird with software, right? You know, like everything kind of out of whack, it's its own animal. But 30% is something that just for numbers sake, that's not a bad number.
Okay, so I wanna take this back a little bit because we're talking just about the very top part of the P&L, and we have 3 more statements to talk about. All right. So the last question on the profit and loss statement that I want to ask you guys is, after your gross profit looks good, you have enough profit to cover everything else in the business. Mark, tell me, what is the other key thing you look at to know if you're doing well in your company, if you're profitable apart from gross profit?
So the other main obvious thing is net profit, right? So I'm assuming that's what you're alluding to, Lysandra. Yeah. So net profit is everything that you have left after you've paid all of your other bills, right? So you sell your pencils, as Julian said, but then you also have to pay, you may have to pay gas, you may have to pay rent, you may have to pay, salaries, all that stuff. So the question is, after you've spent, $100, to buy your pencils, and you spend $80 on your rent and your phone bill and your light bill and all that stuff, and you have $20 left over, the $20 is your net profit, right? And just to kind of like address, your question earlier, in terms of what is good, what's high from, what was low, it's very, very difficult to say, just a blanket statement, right? Because as Julian said, it depends on the industry. But what you have to keep in mind is, if you have a low gross profit business, or if you're entering, a low gross profit industry, you have to move a lot of volume because your fixed expenses are fixed, right? So if you have $100,000 in rent, but you are only getting $10 in gross profit, you have to sell a lot of whatever you are selling to even just cover your rent. As opposed to if you have $20,000 in gross profit and your rent is $100,000, all you need to do is sell 5 to cover your rent, right? So as a business owner, when you're introducing new products or entering new markets, what you want to think through is, okay, what are your fixed expenses? Then what is your realistic, gross profit that you can expect to earn when you sell your products? And then how much of that do you need to sell to cover your fixed expenses? And then how much of that can you sell to earn your net profit after you've covered all your operating expenses?
Tandra is asking, how soon after starting your business do you expect to break even or even make a profit? That's a good one. Julian, you first.
Okay, Julian.
Yeah, that one is really, really context specific, because are you starting a business that nobody understands? Are you an inventor? Are you going out in the deep end and you're coming with something completely new? That the expectation around that is different than going in a market that already has an established consumer base, that already has an ecosystem of competitors, and you're going in. So let's say, for instance, there is the market for real estate brokerage companies, right? There are many that offer the service. Are you going to go in and join that service? Or is it that you're going to come in on a different part of the value chain? So if you're going in, starting something new is going to take longer. People need to understand your product. You're going to have to invest more to get people to understand what it is that you do and to establish all the growing pains associated with the business. Right. But if you're going to go into an existing model to basically beat everyone else at their own game, or to beat everyone else in a way that's slightly different, but not radically different, then it's possible to be profitable in a shorter time frame.
Right.
But just to answer you, ideally, and this is just being idealistic, you want to give yourself at least 2 quarters. You don't want your cash burn to be too high. You want to give yourself 2 quarters, but it depends.
I think 2 quarters, that's half a year. When I started my business, I gave myself 18 months to profitability because, I mean, I think half a year, 6 months to profitability is very, very, very aggressive for a small business operating in Jamaica.
Welcome back again, everyone. Tonight we're doing our conference recap episode. We just did the segment on demystifying the numbers. I just want to take this time to say good night to Anjean, Shelly, and Elliot, and Asatwa. I see Asatwa in the comments saying, thanks for doing this. I missed out on most of this on Saturday. You're welcome, Asatwa. Don't worry. You can still watch the entire conference on our Facebook page or on smallbusinessportal.com. And Asatwa also says, we were taught that money makes the world go around, and you are right. Who else doesn't like to deal with the numbers? But we must know what our financial statements are saying. Up next, we have the segment on accessing a loan. So let's dive right into it.
How is it that you're able to lend money with less information than a bank comfortably? So what is it that you're doing that makes it easier for you to lend money to people that normally a bank would not lend to?
To the client, we can use character references. We go and see what it is they're doing. We build relationships.
Okay.
And relationships are long-term relationships. So we know the family and the guarantor and everybody, you know, it takes a lot. It's not easy.
Understood. Shifting gears then. Thank you very much for that, Blossom. Roxanne, where is credit union in all this now? We hear from the bank, we hear from microfinance, how credit union fits in. How is a credit union operated, and who is the ideal person to access a credit union?
Okay, so a credit union is a financial cooperative, meaning that our members or clients own the institution. So that kind of structure brings with it a sense of belonging to the organization. This is your organization. And, you know, with that, there's the family feel, you know, and there is the ethos around people helping people. So, you know, your organization is finding ways to help you financially in terms of helping you grow and being able to achieve your financial ambitions. Another nuance is that our members are either individuals or other cooperatives. But how we have been able to lend for business purposes is that we would lend to the business principles. So you'll realize that in itself does cause some constraints. And so you'll find that a number of our business related loans are at the micro to small business type loans. And so that would be our sweet spot as it relates to, you know, business type loans, you know, helping persons, entrepreneurs who are starting out small and wanting to grow. And we find that after, you know, they would graduate, depending on their needs, because a credit union doesn't offer a checking account, business credit cards, those kinds of services a credit union doesn't offer. And so you'll find some graduation after. But we're really skilled with helping those entrepreneurs at the start. They do formalize their businesses in many cases, but you know, but we lend to the principals instead of the registered business.
So if I'm reading you correctly then, and again, correct me if I'm wrong, you in the market, you would say you're closer to the microfinance, but you are also to the bank, but you can't offer the full services of the bank, but your customer base is probably a mix of both, but more aligned with what Blossom described to us as the microfinance people. Did I read you correctly?
A little further right on the continuum, because we do have some of the small businesses.
Okay,
so we'll have the micro and the small businesses, yeah.
Tell me about how onerous or how the complexity of applying and getting a loan from you. Are you more like the bank, or are you more like Blossom microfinance in terms of the forms?
Right. So one of the value points for us, given our relative size, is that we try to be as flexible as we can. And with the structure of being member owned, the member intimacy naturally is a little stronger. We're able to know our members better. And so we have a lot of information on our members. So we try to have a simplified, as best as possible, onboarding process. And even in our credit adjudication, we try to apply flexibility just in terms of some of the financial information that's required. So we try to still manage the credit risk, but offer flexibility based on the complexity of the loan and also the complexity of the business activity that we are financing.
Understood. Lisa Bell now, shifting gears. So Lisa, EXIM is kind of its own animal, is kind of what? Give us a sense now, who comes to EXIM and where do you fit in this ecosystem? When we hear from Roxanne, credit union, Blossom about microfinance, Yvette about banking. What is EXIM exactly?
All right. Thanks, Evado. Just to clear it up, first of all, I'm very much unlike the rest of my colleagues. I am government. EXIM is owned by the government of Jamaica and is focused, and in simple language, we're almost like a lender of last resort. We are a development banking institution and we exist to fill the gaps that these three ladies may not be able to fill and to put focus on the areas that the government thinks is important. Currently, we focus on MSMEs, which is a broad spectrum because they provide such an important role in the development of the economy, but particularly those who are operating in the export value chain. What does that mean? We primarily lend to exporters or any other company that produce goods and services that go help to build export.
Okay.
Of course, that gives us a wide parameter because a number of our productive sectors are our targets. So it could be from tourism to manufacturing to mining to agriculture to agribusiness. We really look at the entire spectrum of productive enterprises and to provide support where they're unable to get lending from other financial institutions.
So what is it that you said that there are holes that you are filling vis-a-vis some of the other financial institutions? So what is it that you make easier to access? What hole is it that you're filling? What type of person comes to you that is unable to go to one of the other institutions?
Because we're unregulated, we don't follow the regulations of the rest of the financial sector. We are able to provide more flexibility. So it may be in the collateral that you offer us. Okay. We're not as rigid in the ability to restructure, to handhold enterprises for a longer period of time, particularly when you're in an emerging sector or you're just starting out. It's just a more flexible approach in all areas of lending. For a long time we had lower interest rates, and in some cases, even though that is not always the case now, it is just the nature of the service that we provide. We're a smaller entity and we do a lot more hand-holding of our clients in terms of walking them through the various stages of their business cycle and to support them when they get in trouble, quite frankly.
That was such a powerful segment on accessing a loan. Like, this segment especially was important for small businesses because we need to know how to position ourselves to get that loan, to get that funding, and how you can attract and appeal those investors. So we're wrapping up actually, and that was the second to last segment. So our last segment is going to be all on teaching kids about money, because we need to have this conversation within our families. We need to make sure that we share the knowledge with our children, with each other. And next up, we're going to see how that turns out.
We're going to hear from Sansia Thompson, Regional Manager, Region 1 and Private Client Services, NCB Capital Markets, and Simone Terrelong, Executive Wealth Advisor, NCB Capital Markets. Sansia and Simone, over to you. Welcome, welcome, welcome.
Thank you so much, Rochelle.
Thank you, Rochelle. Thanks for having us.
I will allow Simone just to go through some tips, and of course here and there I will just indicate, because I have a son, he's a teenager, and boy, I would have read the books, I would have been in the profession for quite a number of years, but let me tell you, when you read it and you apply it, it's sometimes really hard and you have to just adjust along the way. So Simone will just take us through the presentation, and then we can just talk a little bit more about how it is that we were able, because we're both parents, how we have been able to juggle this by ensuring that our kids have, we are creating generational wealth.
Today we're talking about what you need to teach your kids about money. Now, I can remember my first experience with money. I was about 5 or 6 years old. And I remember my mother came home with 3 piggy banks, one for me and the other 2 for my sisters. And she said to us, girls, I need you to start saving. So put aside the little coins, the little loose change in your piggy banks and save for a rainy day. So me, being the wash belly, I wanted to outdo my sister. So, you know, I was running up and down and trying to find little loose change and coins. And, you know, but me being my 6-year-old self, I took whatever my mom said to me in the most literal sense when she said save for a rainy day. So I did save, but when the rain fell, so did the money go. I actually spent it, you know, but kudos to my mom for actually, you know, laying the foundation from early. And, you know, that's basically what parenting is all about. When you think about the fundamental role of being a parent, it's essentially to give your children the right tools so that when they become adults, they can actually function independently of you. What is the right age to start talking to your kids about money? So studies and research have shown that you can actually start talking to your kids from about 3 years old because they are able to grasp basic financial concepts from about age 3. But the truth is, there is no one-size-fits-all approach when it comes to when is the right time to start. I would say the best time to start talking to your children about money is when they get to that phase where they start asking a lot of questions, you know, gathering up information. When you can sit them down and have a relatively reasonable conversation with them, that is the right time to introduce money. I want to share with you 5 money habits that you can actually teach your kids. The first one is to be open about money. And we can look at some strategies for children that even as young as 3 to 10, you can be open about money when you look at grocery shopping. Grocery shopping is probably one of the most informal yet effective ways to teach your children about spending and about the value of a product. Think about it. When you go to the supermarket, it's probably the most first and frequent exchange that a child has with spending. So what you can do is use the grocery shopping exchanges to show the child how you compare products. Show them when an item is overpriced, or you can show them how you can get a discount. Like you can lift up an item and say, you know, if mommy buy this at one of this at this price, I'm gonna get it for X. But if I buy 3 or more, I'm gonna get it for Y. So mommy is gonna save some money there. You know, you can use those simple ways to talk to your children about spending and money, how to save money. You also want to talk to them about the household bills and let them know how they can help the family to save money, right? Let's say, for example, you talk to your children about turning off the light, closing the refrigerator door properly, and just basically talking to them about the consequences of poor energy saving practices. You also want to talk to them about what's going on in the family financially. Now, I know that as adults, we probably do not even want to face our own financial realities, right? Much less to talk about that, you know, financial realities with the children. But it's very important. Now, I'm not saying overshare every single thing and, you know, terrify the poor kids to death. I'm not saying that, but at least let them know what's happening with the family money. The second habit that you can actually instill in your child is to teach your child about the value of money. Now, let's I would say that the best way for you to teach a child about the value of money is for them to start earning it themselves, right? Now, there's so many ways you can do that. You can consider, if you can afford it, you can make them earn an allowance. So let's say, for example, they can do some household chores, you give them an allowance for that. You can reward them for good behavior. The next thing you can actually do is also encourage them to earn a job. Now, you know, as Jamaicans, sometimes it's a little bit difficult for us to embrace that kids can actually start earning before they turn 18. But yes, they can, and we should encourage them to start making money before they are 18 to help themselves out, right, Santia? No, one of the things that you can also do is support an entrepreneurial endeavor. Kids, if you find that your child is very creative, allow them to use that, generate income from that creativity. Now, the other thing that you want to consider is to lead by example. Because while it is important to talk to them about money, you really have to reinforce that by your actions, right? Now, studies have shown that in the family setting, children actually learn more by observing and imitating their parents more so than what their parents instruct them to do. Studies have shown that. So the do as I say, not as I do approach does not necessarily work in this situation, right? So, you know, they hear about what we say about money. They observe and absorb how we react in financial situations. So the question is, what type of money messages are you sending your child? You know, we're going to be wearing our advisor hats in this habit, Sancio, is allowing your child to save and invest early. The sooner you can instill the importance of saving is the better. Now, I think for most Jamaican families, Sancio, they actually know that, you know, opening a savings account is probably one of the most for, you know, setting the financial foundation for the child. That's probably, most Jamaican families know that, right? But what usually happens is that, you know, the account is opened and then the money from grandma for the birthday or the holiday money from auntie goes into the account, or you as a parent may deposit some money into the account. But then the child doesn't know what's going on with the account until it's handed over to them when many years after.
If it's handed over.
All that too.
Yeah, if it's handed over and sometimes it just remains in the savings account. And it's important, Simone, to understand that we need to level up. It's a little bit more than just saving, it's also investing as well.
Final habit is that you want to use the tools of your generation. Teach your child in the age that we're living in. We are the first generation to experience before and after the internet. Right now, children are, you know, because of COVID, children are actually, you know, we are used to going into school and seeing teacher write on the chalkboard. Now, hybrid learning is probably something of the future, you know. We are commuting to work every single day, whereas our child probably will never have to step foot in an office, you know. So we really have to teach your child in the age. And so you can use online resources such as apps. You have 2 apps, like a Kids Money app, which is free, by the way, for kids ages 5, a little, say 5 to 8. And then you have another app called Starbank's Adventure, which is really for kids age 8 to 14. You can actually use those apps to help them to learn about budgeting and spending, and, you know, just use it as a way to educate them, and you can use it with them. It's a fun way. So basically, in a nutshell, if you can use these 5 habits, I am sure once you are able to adopt them in your day-to-day life, just sit back and watch and see your child attain financial success.
That was our final recap segment for tonight's conference recap episode. I hope you enjoyed it. We went through 3 segments tonight: demystifying the numbers, accessing a loan, and what to teach your kids about money. But you can find the entire full conference on this Facebook page or on smallbusinessportal.com. And you can go on smallbusinessportal.com to get the conference booklet with all the points and all the tips that you need to flourish in your life, living your best life in your business and yourself too, spreading that money and spreading the wealth. Now, we all love to spend money, even when we don't have money to spend. But remember that the money looks better in your bank account than it looks on your feet. Believe it or not, it was such a pleasure to host with you tonight. I'm Justine Isaacs. Remember, if you are an individual or a business and you want to join the PSOJ, become a member, because we share the same vision of building the private sector. So please remember to subscribe to our memo and watch COVIDCast every Thursday at 7:30 p.m. and go to smallbusinessportal.com right now. Again, thank you so much to our sponsors, our speakers, our presenters, and stay good and think rich.
So you have a great idea to start a business, but you don't know where to start. We completely understand. You have a lot of questions and almost no answers. Smallbusinessportal.com is here to help. At smallbusinessportal.com, you gain access to information on loans, grants, and investment opportunities from verified financial institutions. Guess what you also get? Useful business tips, access to training. All these services combine to make your business idea into a reality. Start your journey today at smallbusinessportal.com.